Okay, hello everyone, and welcome to the weekly close. This is a new segment I'm going to do every week after we get the weekly close from Bitcoin. We're just going to run through some Gann analysis and we're going to talk about what we think's coming. So let's just jump right into it. So we have had the weekly close this week. This is Bitcoin on the weekly chart. The weekly close came in about 6 hours ago. We're hovering just by these old all-time highs. We pierced through and we've been kind of here for about 7 weeks now, still consolidating. We've gone down about 19% from peak to trough. From that peak to trough, about 19%, which in crypto world is not a whole lot. So we could see lower prices, but that's not confirmed. It is my general thesis that I think we are setting up here for another leg higher. It's just a matter of when that's going to come. But when that will happen, we're not sure. But there's a few ways that we can get a lead on this market. So we are sitting pretty strong. If we look at this 50% level, we're sitting in the strong half of that. Okay. Anything down to that level is still strong in my opinion. But again, we take that one step at a time. So what I'm seeing a lot in the media is still a lot of bullishness. And I think we're not going to see higher prices until a lot of that bullishness can be kind of knocked out of the system. I still see all these analysts calling for higher prices. We need to see, we're going to see a big move soon. It was all this halving stuff and then this and that. And generally speaking, if you're doing what these analysts are doing, then you're not going to make money. That's not how the market works. And it is true that usually the market will do exactly the opposite of what you think it's going to do, at least the masses anyways. So if you want to be doing what the people on MSNBC are doing, you're probably not going to make a lot of money. And it's typically the case that the contrarians always do profit the most from the market. So I always try and pay attention to what they're doing. So realistically, I can do the opposite. Now, I don't trade off that, but it is something that I watch to think about what I think the market will do. And since I've just been seeing bullishness, I think we need a bit more time to digest this major move that we've seen. It's quite a massive move, which is why everyone's talking about it now and getting bullish. And so I think we should just probably see a bit more time to consolidate and digest this move. Probably some quietness or fear is a good thing. If we can just consolidate around here for a few more weeks, maybe months, until everything goes quiet, people start talking about it, maybe some fear, maybe some news, the rate cuts or CZ going to jail or the SEC and Ethereum and all this stuff. I don't really pay attention to exactly what's happening. I certainly don't use it to trade or build my macro positions from, but I do try and get a bit of a general feel of the market sentiment so I can start thinking about doing the opposite. Is what's true. So I said I'm expecting Bitcoin to go into a price consolidation eventually, and that is based on some cycle analysis. We have 4 cycles actually kind of coming to a head in these coming years. We have the Bitcoin 4-year cycle, which has produced some of the most aggressive moves in the past. So we had that one there that I just showed you. We had this one here, that one, and then we had that one. And that is actually what we're setting up for here. So typically Bitcoin will hit an all-time high, consolidate for a bit, and then we will see a bit of a blow off top. That is my thesis. It's also based on a few other cycles. We have the property cycle, which is the 18-year cycle. That's coming into the final stages. We have the commodity cycle, which is a 60-year cycle, which is coming into the final stages of that. You see things like copper, silver, gold, all getting big moves. Okay, gold in all-time highs. So that is showing that the commodity cycle is playing to ball, and it's happening as expected. It's the commodity cycle and the presidential cycle, which is a 4-year cycle, of course, that usually sees a rally in the markets. And that's coming up this year in November. So those are all reasons, that will shape my thesis into a bit of a macro blow off top. Speaking of the property cycle, it's one of the most important cycles. It's 18 years. The last peak was in 2006, 2007, right before that major crash, which is what I think is going to happen after we see this blow off top. So we're going to get a major blow off top, I believe, in all markets, stocks, crypto, property, commodities, everything like that, before we do get a bit of a crash. And we could end up back at these levels here. You can see lots of support on this level. But what I'm positioning for, what I'm looking for, is this next major move here. But when is that going to come? There are a few things that I'm looking at to give me a bit of a lead on the market. So let's zoom into the daily chart. Okay, the first thing I talked about was some fear coming into the market. If we did see some fearful moves about rates or something like that, we saw a drop down to that 50% level that I spoke about, and then a higher close. That would be the first indication. Another thing is if we just go quiet and all the liquidity starts coming out of the market and no one's really talking about it, the bar sizes are getting much smaller and smaller, that is going to give me, and we don't make lower prices, if we just stay in this range like that, that is going to give me further confidence that this next move will be quite aggressive. So I talked about that. Right. So actually, let's go back to the weekly before we go into the daily. I want to show you one other signal that popped up that is a bit of a warning signal for the bears. Okay. So this overlay you can see is the Gann swing overlay. This is based on Gann's analysis 100 years ago that still holds true today. This is one of the only indicators I use. Shout out to the boys over at TIA. It's the Pizzino brothers, TIA Gann swing indicator. It's really the only indicator that I use, apart from volume. I don't really have volume shown here. Because the most important thing is this Gann swing indicator. So it really shows you all your tops and bottoms, 50%, trend lines, everything kind of comes off this, as well as my trade signals. Okay, I get all my trade signals strictly from this indicator. So we had, you can see this major move up. We saw a swing low here, a swing low here, a higher swing low there. And then finally the highest swing low was broken on this bar. That was 4 weeks ago. Control Z. So let's zoom in. On that breakdown bar, we saw it break down low and then close high above that entry zone, above that breakdown zone. And that is, for me, the first warning signal that this move for the bears is not going to be long lasting. Typically what you want to see, like what we saw on the previous bull move when the last swing top was broken, we saw a very strong close well above the breakout level. We saw it close right at the top of the candle. And then of course we saw the follow through. Okay. So on this bar, and you see this time and time again, on this candle, we saw the breakdown and then a snap up and a high close above or not beyond the breakdown level. And that is the first indicator that this is not going to see much follow through. And that's exactly what we're getting now. That was 1 to 3 weeks ago. And now it's just kind of going quiet a little bit. So that's what gives me kind of a bit of hope that we're not going to see significantly lower prices from here. But if we go into the daily chart, so let's zoom in and let's talk about what's going to give me the bit of a lead on the market of when when I think the bulls are going to start taking over. So let's turn off the 1-day chart. Now we have the 2-day chart, and I threw some time counts on here. So these are what is giving me a bit of a lead on the market. So we saw here, you can see the numbers are counting the days that the bulls were in control at the top, okay? And at the bottom are the days that the bears are in control. So we had 20 days up, and then we had 7 days up, and then we had 5 days up. So as you can see, the bulls are losing control of the market. They had control 20 days, they had control 7 days, and then they had control for 5 days. Whereas the bears are gaining control. They had control for 6 days, then they had control for 7 days, and then they had control for 11 days. So they are gaining control. And that is still the case, okay? So we have, let's take that back off. So that still remains true. So the the bulls had it for 5 days, then they had it for only 3 days, okay? That was actually just confirmed a few days ago, that swing top. And now, so the bears have been in control for 7 days. And what we would want to see for that to flip is we would want to see this number in this current swing to be less than the last swing, 11. So that would give me the first indicator that the bears are losing control if the time that they have in control is getting less and less. And this is what Gann always said, is that time is always more important than price. And that is going to, that is kind of an overbalance or an underbalance, depending if you're a bear or a bull, in terms of time. And you are trying to get a bit of a lead on the market. So we want to see that this current number be less than 11 to see the bulls take back control. And we want to see the next, when that does finally switch up, wherever that comes in, maybe it comes down a bit and then we get a turn up. We want to see the next upswing to last longer than 3 days. That shouldn't be too hard, okay? Shouldn't be too hard at all. So we're starting to see these numbers decrease, but decreasing by less and less, right? 7, 5, 3. It's a big change from 20, right? That was a bit of an extreme move. So it's just kind of grinding around. And now if we throw on a price indicator, so let's put on a 50% level. Let's bring it down to there. Let's get rid of this old all-time high. Let's get rid of that. So let's just look at this range. We'll get rid of these time counts. So just looking at the price swing charts, we did have something happen just recently. We have a confirmed downtrend on our 1-day 2-bar chart. We have a higher high, lower high. We have a low, and now we have a lower low. So that is a confirmed downtrend. What we would need to see that switch back up is a break above this high that would give us a confirmed uptrend. A higher low and higher high. Okay, but that is provided we don't see a break of this low. We just get above that breakout level there. That's going to give me extreme confidence that we are in the strong half of the 50%. We have a confirmed uptrend on our 2-day chart. And if we go back to the weekly and throw on the 1 week 1-bar chart, as you can see, just recently, actually just a few hours ago, after this new weekly bar just opened, we have formed a swing top. So this swing top just formed as soon as this bar broke below this previous candle. So what's going to get me even, or a further reason to get bullish by getting above this level, is we're going to have a weekly trend turning up, okay? So we're gonna have a weekly trend turning up and a weekly swing break. That's gonna get me very bullish. Okay, so we'd be in the strong half of this. It would overbalance our time counts. It would overbalance our price back into the strong half. And one more reason why I think a break above that level is going to be the one that sends us off is because if we go back to the daily chart, 2-day, 1-day 2-bar chart, we'll turn that one back off. We have a fourth time breakout level. So what you see in a lot of markets, you just saw this in gold lately when it broke into all-time highs, is when you have three tops or bottoms formed around the same price level. Typically what happens, actually very frequently what happens, is when that is approached for the fourth time, you will see a significant breakout. It's like a cinder block. You hit it so many times and eventually it breaks. And that tends to be on the fourth one. That's another thing Gann talked about. And if we see a break above these levels, that's going to be the next level to test. So I think that's going to be the one that breaks it. But until then, there's no confirmation. We're still seeing lower prices on our charts. So we just need to wait and see what happens. Will there be some negative news that comes out, and do we get a flush out? Do we get a flush out and lower prices? Do we get a flush out and then a high close? Or do we just see the market go quiet for several weeks and get everyone to stop talking about crypto? And then is that going to be the thing that we need to see higher prices? So that is really all I have to talk about. That was the weekly close. I hope you found some value in that. I'm going to try and make more videos like this. I'm going to keep them kind of low production value. I'm not going to edit them very much. Just going to be riffing about what I see. I have some notes here and I'll just go through them. Hopefully you guys found value, but otherwise stick around for next week and I'll be back with another episode next week. Okay.